Thank you, Tony. I've got a lot to unpack here today, so I'll go quite quickly, so please stay with me. It's worth your while. We announced yesterday some of the best and highest grade copper grades I've seen on ASX, or in fact worldwide, in the last year or two. So strap yourself in and I'll give you some of what that means in context as we go. I'll jump over that slide for now. A quick look at the register. As Tony said, Northern Star comprised 16% of our share register. They've been very supportive. Part of the reason for that is our immediate northern neighbour in Alaska. And we're in Alaska and we're in Nevada. It's very much a North American focus. They're not alone. Rougher Gold Fund, one of the largest gold funds, US Global as well, and even Lundin Mining, another mining corporation based in Canada, USA. It's a tight register for that reason. Now, where are we? Most of you probably don't know a lot about Alaska unless you've seen it on the Discovery Channel. I'm here to tell you it's kind of nothing like that, really. We are on the Denali Highway. We're only 7 miles off it. We're only 20 miles off sealed tarmac on the main thoroughfare between Anchorage, the port of Anchorage, and Fairbanks. And Fairbanks to the north, in the centre of the state, is very much the Kalgoorlie, if you like, of Alaska. It's surrounded by mining projects. Now, I won't labour every one of these, but certainly have a look at Donlin and Pebble. They're both discoveries in the last 15 years. Pebble's 100 million ounces of gold undeveloped. Donlin Creek, likewise, another 100 million ounces of gold. They're not all large, low-grade positions either. Pogo in particular, Northern Star's had that for 5 or 6 years now, I think, in total. That's now 11 grams per tonne, and they have 7 million ounces of it in resource. They're there to stay. You know, the reserve at the moment's in excess of 5 million ounces at 15 grams per tonne. It's one of the highest grade producing gold mines in the world. We're south of them. Everything you see in that picture there is ours. We've got 35 kilometres of continuous tenure here. There's a lot of exploration horizon. And we've only drilled 2 small parts of it. They're at Caribou Dome and there's Zackly. Zackly is copper and gold. Caribou Dome is copper and to a degree silver. Both are particularly good grade, and Caribou at the moment has been very much the star of the moment with some drill results I'll show you shortly. It currently comprises 7 million tonnes at 3.1% copper. That's pretty good grade by any means. Likewise over at Zackly, it's more gold than copper actually. It's 1.6 grams per tonne and 1.1% copper over 4 million tonnes. The two together provide the genesis of a small projected scoping study for a flotation plant. I'm not going to labour these, but it's safe to say, even at that relatively modest scale, the sheer profitability of this is driven by its grade. 74% internal rate of return tells me there's a lot of room for CapEx overrun and a lot of room for rising costs. They're both at less than current market prices, more of that soon. But current NPV is about $625 million for something that's actually fairly small. Now, unlike many exploration companies, we drive things with economics. If it doesn't make sense, we don't do it. You'll hear me say that time and time again. Having generated this study in only January this year, and it's the 3rd time we've done it, the first thing we said was, all right, where's the next money come from? You have a look at the right-hand side there, rightmost in Aussie dollars. Where are the biggest NPV uplifts next? Well, they're actually drilling Caribou Dome deeper. More so than Zackly, because we're going to mine Caribou Dome first, given its impressive grade. And I'll show you some of how that's going shortly. But, you know, we've only modelled the reserve down to 300 metres. It starts at surface in both deposits, and it doesn't get much better than that when you're in high grade at surface. So there's no overburden in either of them. Both of them lend themselves to going underground quite quickly too. We didn't overkill the prices. We ran these metals prices in January this year. $8,500 copper was the baseline. It's currently $9,250. It's seen $10,000 since. Gold's had an impressive run since, up 20% to 2,500 US. We modelled it at 1,900 and the 625 million NPV I just showed you. Likewise, the silver that comes with it. It's $30 today, not 25. Now, more of those drill results I was telling you earlier, and I spent a little time on this and try and get it in some perspective. 15.5 metres at 7.4% copper yesterday. And of that, 8 metres was at a whopping 11.4% copper. Now, to get those grades in perspective, because you don't look at copper projects all day, every day, the majority of the world's mines average about 0.5% copper as their head grade. You know, this is in excess of 10 times that. So it's exceptionally high grade. Those holes were not alone. Above it, which starts from surface, we drilled 19 metres at 7.6% copper 18 months ago. Now, to get that in some sort of context, this thing's a vertical structure. The true width of 15 metres, and this would be about 10. The entire width of this stage is roughly 10 metres. So if you can imagine that vertically. When you look at it, it looks like that. I mean, that almost looks like it's solid metal. On the right-hand side there is metre after metre after metre of the good stuff. Now, that bit with the arrow on it in the foreground graded something like 15% copper. Now, even at 7%, which is what we announced yesterday, just one single cubic metre of 7% ore like that contains $4,000 worth of copper. And all we have to do with it is mine it, crush it, float it into a concentrate and truck that off for sale. So it's not a particularly difficult process. Now, they're impressive grades by any standard worldwide. And I searched the web a few months ago just looking for some of the higher grade historic and current producing mines around the world and thinking, well, where do we sit? Even at our calculated current 3% resource reserve, we're still in the top dozen. Now, look where some of those are. They're in places like DRC, Spain, etc. More difficult to operate politically for long periods of time than good old Alaska, which is USA. Now, we're on state-owned tenure there. There's no native title to answer for. It's been mined very profitably by a number of people, including Northern Star and Northern Neighbour. So it's well-trodden ground in an area which has 80% of its production, or its GDP each year, comes from oil and gas and mining. So they need it to survive themselves, which is great. It's not all about Caribou Dome, the high-grade copper. Moving along to the other end of our 35-kilometre trend. Now, to get that in perspective, roughly from here to Tamborine Mountaintop's about 21. We've got 35 k's of continuous tenure here. Most of it has been soil sampled and is mineralised from surface, so there's a lot to unpack. At Zackly, just for scale, there's two of our guys in the foreground next to the yellow lines. We've only really modelled 800 metres of strike there. Now, we have over the last couple of years extended our projection into the future by drilling a long strike. We've got almost another 5 kilometres of strike that needs to be infilled to add to that existing resource would-be reserve at Zackly. The Zackly bit itself only comprises the red part on that particular slide, over 800 metres. Now, there's too many things there to read, but safe to say, outside of the existing resource and reserve, you will see hits there of there's two hits in fact, of roughly 50 metres thick, gold at 3 grams per tonne from surface. There are other 25-metre hits like that as well, and it's both gold and copper. Sometimes it's more copper, sometimes it's more gold. A lot to be done there. What we really need into the future is a budget to do a lot more work on this in particular. We ultimately think Zackly will probably be bigger than Caribou. Now, to put a little more perspective around it, all of this has since been soil sampled over the last few years in our holding. We're the first people to own it all. That soil anomaly on the right-hand side there is 11 kilometres long by 8 kilometres wide. It contains copper, gold, silver and molybdenum, your classic suite of porphyry-style metals. Never been drilled. We've only drilled Zackly and Caribou Dome, and we've done those because they daylight, and the older timers in the 60s and 70s could see them, and they did some drilling on it. We've just sought to try and bring that to monetisation to give us the headspace and the funding to have a go at the big picture in the future. You know, that's what it's really all about here. You know, 35 kilometres of continuous tenure is a big patch, as I said before. It's roughly Coolgardie to Kalgoorlie if you owned all of it, just to get your head around that. And that's precisely one of the reasons why Northern Star are on our register. They see the same thing we see. Now, of the porphyry story there, because this whole thing's one big porphyry project, we did get a discovery hole in, and we got about 100 metres of porphyry fringe mineralisation. Now, the market really wasn't interested in that type of mineralisation in 2019, and we were locked out of it for 3 years during lockdown with COVID. But safe to say, we have drilled into the halo of one, and we have what I would call proof of concept. One of the constraints in Alaska from an explorer's point of view is exploration works well, and it's daylight 24 hours a day, pretty much from late April into May until end of September or early October. So roughly the Australian footy season is the time you go drilling, and you go drilling 24 hours a day, which we do. It means, though, from an explorer's perspective, you need to do something else during their winter months. If you're a miner, you mine it 12 years round, everybody does. Or 12 months round, I should say. Hence Nevada. Now there we are in Nevada, and we drilled that right up through Christmas 18 months ago. A little over now, obviously. It's not that cold, it's not that bad. You can drill it year round, and we intend doing so. Now we are on some interesting tenure. It was mined in the 1860s. It has not had anybody do anything on our particular patch of tenure in over 100 years. Now they've obviously got a sense of humour out there, or maybe it's real, but always take notice if you see a sign on a derelict town site with feud in process written on it. Somebody has a sense of humour, that's for sure. Now where are we? That black line you see alongside the river there is actually the I-80 highway, runs east to west, USA. It's the road that runs between Reno and Las Vegas. A better, more localised point of view. We are surrounded by producing heap leach operations. That's the way they like to do it in Nevada. Now, you probably wouldn't know this unless you're from the USA, but 75% of all the gold produced in USA every year is from this type of very broad scale, low grade, low cost mineralisation. Now we've got a 400 million ounce silver mine south of us, divided by another one which we think is probably 8 to 10 being built over the next couple of years, and we're hard up against a 5 million ounce heap leach operation that's less than 1 mile down the hill of us. Some fantastic rock chip samples early on. We were able to replicate some of those. They come from literally hundreds of high-grade quartz veins like that. Now generally what goes wrong with high-grade quartz veins is there's massive dilution in trying to pick the eyes out of it and just pick the high grade, because the stuff between it's hard, barren waste. Not the case here. The stuff between it actually carries grade. Now it doesn't have to carry much grade to carry the marginal operating cost of moving it or even make a profit from it. And that's exactly what our neighbours do, only they don't have as many high-grade quartz veins as us. Now, we wanted to know roughly what it might average, very early days. So don't try this at home, folks, but we cut a 2-inch thick channel, 2 inches deep, sampled it like a surface drill hole from an up thrust, which explodes the underneath geology. Tantamount to a drill hole, if you will, except it's in surface depleted material, and it still measured 69 metres at 1.1 grams gold from surface, with about 1/4 ounce in silver. So it's mineralised everywhere, and it was fairly consistent metre by metre across that 70-odd metres too. While we were doing that, we soil sampled the entire thing. In the background there's the 5 million ounce Florida Canyon mine, just down the hill at the bottom of us, and the I-80 highway behind it. Some of those rock chip samples are off the scale, right? You don't see those very often. We drilled some of it. We did get low grade everywhere. You can see it there. But then we got 9 metres at 124 grams too, off the scale high grade. So when you're in it, you're in it. We knew from the neighbours that higher grade gold comes with more sulphide intensity and it reports to IP. So we did some IP work over it. Surprise, surprise, it overlays the soil sampling we did in a 3 kilometre long anomaly that's almost a kilometre wide. You cut it into cross section, it runs right the way through the hillside, never been drilled. We're planning to get in there in the next month or two and just see what's underneath that thing. If we can get a lot of high grade veins along with the low grade material, it'll not just be a heap leach operation, but all of the high grade veins will come with it for free, is our dream at the moment. That's our program for the next few months. A few cautionary statements because they're compulsory. And I just want to leave you with a thought on the scale of what we're looking at in Alaska. You know, there's high grade there. There's a lot to work on for an awful long time. There's enough room there for a major to want to own that, or us to become one and mine it for decade on decade on decade. There really is a very big position there, and the sort of thing you wouldn't find elsewhere around the world. Thank you. PXX is our code.